grocers and food retailers are preparing for a fresh round of new tariffs. In 2024, the U.S. imported more than $200 billion worth of agricultural products. According to the USDA, a large portion of those imports were fresh fruits or vegetables that, given climate differences, they can't be easily produced in the U.S. That leaves sellers with little alternatives to higher tariffed goods. Joining me now is Abhi, CEO of Misfits Market. It's an online grocery store that offers sustainably sourced groceries with a focus on rescuing food that might otherwise go to waste. Abhi, thanks for being here. So obviously, you guys are watching this very closely. How are you guys preparing for this, and what part of your assortment could be affected by these tariffs?
Yes, so we've been doing preparation work for the tariffs on produce specifically for a couple of months now. Obviously, it's been whether or not they're going to go in effect has been changing every other week, so it's been a little bit of whiplash. But a lot of it has been doing some planning with our vendors, with our freight providers, and coming up with kind of a pricing strategy internally as well. Today, at Misfits, we offer north of 1,000 different items in our catalog. It's probably around 40 of them that will be impacted directly by tariffs for Canada and Mexico. Now, these are also 40 of the highest velocity, most popular items, probably. So when you think about produce, a lot of the avocados, probably close to 90% of the limes that we sell in the United States, bell peppers, tomatoes, those are all items that, at least for this time of the year, are coming largely from Mexico. So those will be items that will be mostly impacted. So we've been doing a lot of prep work on pricing strategy and working with our vendors as well.
And how about alternative supply chains? I was reading earlier this week in the Wall Street Journal about Chipotle trying to find other supply chains for avocados, for example. But the problem is that we in the U.S. like Hass avocados, and there aren't that many countries that grow them at this point. So have you been trying to diversify at all? And if so, have you run into some of those kinds of hurdles?
It's a great question. So we generally source in the U.S. When we can for most of our commodities. And so our team's done an excellent job of diversifying the supply chain and focusing on local growers over the past couple of years. The reality of the situation, though, which which we've been spending a lot more time on, is a lot of the items that grocers and restaurants are buying from Mexico today, they can kind of only be grown in Mexico, given the growing environment. So let's use limes, for example. So people don't think about this, but close to 90% of the limes that are sold today in the United States are grown in Mexico. And it's not because people don't want to buy limes that are grown in the United States. It's that the very specific tropical or subtropical climate that is required to grow limes doesn't exist in the U.S. outside of a couple small parts in California and Florida. And so the vast majority of limes have to be imported from Mexico. So we have been looking for alternative supply. We try to obviously source locally in the U.S. when we can. But I think a lot of other grocers and retailers are going to be the same boat, where some of these items you simply cannot source from the U.S. in certain times of the year.
Yeah, it's not a reshoring proposition here. So you talked earlier about your pricing strategy and having to sort of attack that. So are you planning to pass the full additional cost of those tariffs onto your customers?
So right now, our plan is not to pass on the full cost. Our plan is to probably pass on a portion of the cost. Now, Misfits is in somewhat of a unique situation because of the way we purchase items with our kind of rescue mission, our ability to buy opportunistically. We generally have a little bit more flexibility on pricing strategy than a lot of other grocery retailers. I think we're going to probably be able to shield our customers somewhat from the full burden of the tariff impact. That being said, I think consumers on our platform, plus probably any other grocery store, can more likely than not expect higher prices than before. And certainly on some of these commodities like avocados and limes and bell peppers and field-grown tomatoes, where 80–90% of the supply right now in the U.S. is coming from Mexico, and there's not a viable alternative, I think consumers will see higher prices more likely than not over the next couple of weeks.
And Abhi, just quickly, you guys have a direct line to your consumers because they are buying it directly from you online. Are you going to tell them? Are you going to send a note and say, sorry, we're raising some of our prices because of what's going on with the tariffs?
We plan on being really transparent about it. All right. I think most consumers are really savvy. They're educated, and they also are interested in understanding what is going on in the food supply chain, and especially recently. So our plan is to communicate this transparently. Our plan is to probably send an email out push notification out via the mobile app and saying, here's what we're doing, here's why. We've also generally kind of focused on storytelling to our customers, explaining how products got from the farm to their doorstep. So this is just going to be another piece of that story.
Abhi, thank you so much. Really interesting stuff, and good luck navigating all of it.